Thank you for the kind introduction. At DTZ, we sort of seek to match capital to projects and partners, and it's really in that capacity that the organisers of REIW have asked that I moderate this panel. It's my privilege to be moderating a panel with the theme connecting mixed-use properties and master-planned communities with capital, investment and funding. We've heard some thoughtful comments from Tyler on related matters, and we hope in part to build on those. I'm sure there's more questions that you would have had for Tyler, so please, if we're picking up on the subject, be poised to ask those questions of us in due course. We are sat here today in Marina Bay Sands, a mixed-use project combining a number of elements. It's one of a growing number of integrated resorts across the Asia region. Itself, of course, it sits within a much larger master-planned area, namely Marina Bay, which pretty much covers every single asset class, blended with comprehensive public facilities and public transportation. And taking this, therefore, as the example, you'll appreciate the enormity of the subject matter set by the organisers of this particular panel. So accordingly, without further delay, let's go and meet the panellists. Good morning, all. If I may, starting from my left, if you'd like to introduce yourself and your role and reason, I suppose, for being a participant on this panel today.
Hi, good morning, everyone. My name is Kheng. Currently, I'm the CEO of Singbridge, International Singapore Private Limited. What we do is we conceptualize, we structure, we invest, and we master develop large-scale integrated cities and townships internationally. The key is we are both investor and master developer. Singbridge is 100% owned by Temasek Holdings.
Richard.
Hi, my name is Richard Paine and I work for Lease Corporation. Lease is a large international property player listed on the Australian Stock Exchange. We have three major business thrusts. The first one is funds management. We're a very large player in the private funds sector. We're into property development and a very large player in residential and retail, predominantly development. And we're also a large player in the design and construction market. And with regards to mixed-use developments, we're working on a lot of them around the world at the moment. A very large one in Australia called Barangaroo, which I believe is the largest mixed-use waterfront development in Australia at the moment. And we're very happy that we had a very large leasing deal announced just recently for that development, which I think was the largest in Australia. We're also working in Victoria, on Victoria Harbour, a very large urban master-planned community that's being developed over a very long time frame, 15, 20 years. We recently were awarded a project in Brisbane, the Showground, which is a very large mixed-use development as well within Brisbane. And probably relevant to the discussion on London is we've just completed the Olympic Village for the athletes in the lead up to the Games. And closer to Asia, we're working on a project out at Jurong called GEM, which is a mixed-use project incorporating both retail and office. Our business focus, Lease's business focus is across the regions of Singapore, Malaysia, China and Japan. And I head up a small team which is called the Integrated Solutions Team, which is really tasked with the job of matching capital to the various pipeline opportunities that present themselves.
Hi, I'm Scott MacDonald. I'm Chairman and CEO of Investa Property Group. We are an Australian-based company. We only operate in Australia. We have two divisions. One is office buildings in downtown locations. We have about $7.5 billion current value of office buildings that we have ownership in and we manage. And then we have a land development group that does primarily residential estates and also some industrial estates.
Hi, good morning. My name is Puah Shyang. I'm a CEO of Surbana Land. Call me TS for short because my name is a tongue twister. Surbana Land is a wholly owned subsidiary of Surbana Corporation, which is in turn 60% owned by Temasek Holdings and 40% owned by Capital Land. We were formed in 2003, corporatized from the Housing and Development Board of Singapore. So the over 1 million public housing apartments in Singapore is largely designed and developed by us. We are now focused in China doing large-scale integrated townships. We have 5 projects in 4 Chinese cities, Chengdu, Wuxi, Xi'an, and Shenyang. Altogether, we have acquired about 6 million square meters of GFA. That translates to roughly about 60,000 apartments. We have sold and handed over about a quarter of these. Another quarter is under development. To support our operations, we do raise capital from our own shareholders and institutional investors. We also did raise 2 private equity funds, managing about $500 million US in resources. And at the project level, we do also work with players like from Singapore, Capital Land, from Hong Kong, Henderson Land, and very recently we entered into a JV, $250 million US JV with Mitsubishi Estate from Japan. Thank you.
Thank you all very much for your respective introductions. Let's maybe sort of set the context, set the scene with a question about the evolution of funding and sort of capital solutions for mixed-use projects and master plan communities here in Asia Pacific. TS, look, I'm aware of Surbana's very long history here in Asia, so maybe I could start with you. I suppose, how has Surbana and indeed the industry as a whole seen the sort of the funding options change over time? And let's sort of say, the last 10 to 15 years.
Thank you, Gordon. I'll share my own experience, principally from working in China. I think traditionally, 10, 15 years ago, we associate funding for projects typically through banks financing, project loans, and also through investing out of your own balance sheet for developers. But in, I would say, the last 5 to 10 years, due to the emerging markets opportunities coming up from emerging markets, there's now a plethora of funding options. Later I'll get into a bit of how Surbana does our own funding, which is quite a combination of many sources. But you do see lots of listed funds, non-listed funds, open, closed-ended funds, commingled funds coming to the market, capital looking for projects. It is rather high risk in emerging markets, but offering high returns. Developers are also going the way of listing, opening up to methods of raising capital through retail, institutional. That more importantly, I think we see lots of non-traditional sources of fundings wanting to come into Asia. We have pension funds, we have trusts, we have private wealth, or even home office. These are new sources of funding which perhaps they were involved in some way in the past, but more and more we can see capital eagerly looking for projects. Having said this, I think it was a lot more active, maybe 2005 to 2010. After the crisis sets in, I think pace has slowed a little because everyone is cognizant of the risks involved, but still there are lots of options. For Surbana, we started first stage financing about 8-9 years ago by just forming a company and selling equity stake to Temasek Holdings, to GIC Real Estate. This represents sovereign money coming into the picture. We also have equity stakes sold to an industrial company that kind of represents private wealth. So that's already a start combination. Then second stage, as we grew bigger, we raised our own private equity, closed-ended fund. We have Japanese banks coming into the picture. We have institutional investors. And throughout our evolution, we ourselves have always worked with fellow developers, as I said, Keppel Land, Henderson Land, and Mitsubishi Estate. Most of what they have comes from their own balance sheet, but being listed, they are also a conduit for other forms of investments coming to the picture. Yeah.
Thank you very much, TS, for setting the scene. Maybe I could ask, Richard, Lendlease has been around for 50 years. I think your investment management businesses have been around for at least 30 of that. How are you sort of seeing the evolution of funding alternatives for mixed-use projects?
I guess, speaking from our personal experience, we probably started a journey of, the public REITs, many decades ago, and but more recently, in the last decade, more focused on private funds, and one of the vehicles that we have in the market here in Asia is one that's a develop, quite an innovative product. It's a develop and hold strategy, so it has a development phase and it has an operational phase. It's quite unusual as a funding sort of strategy, but I think we're seeing it's definitely a shift with a lot of the investors that might have been, investing in our funds wanting to take a more senior position, and that could either be through direct stakes, larger mandates, or in a club situation where they've got more of a seat at the table, and the decision making is not left to the discretion of the fund manager. So I think that's definitely a trend. Yep.
And Kheng, you're work for a sort of master developer investor. I suppose, has that always been the model? How do you see it as at today?
Well, the kind of projects that we're involved in, they tend to be not only mixed use, but actually very balanced between residential, commercial, public amenities, and most importantly, industry. So it's a holistic development. And the key is that all these developments leverage on Singapore's successful development experience in the last 40 years. So how has funding changed? In the last 15 years, maybe for all kinds of projects, typically it takes 20 years. There are two levels of funding. One is at the master developer. And here we typically have a joint venture with a local government like China. And then below the master developer level, there are individual projects. At the project company level, it is typical real estate and all the huge array of funding sources applies. But at the master developer level, the key investor at the master developer level, I'd just like to take you through 3 projects to look at the evolution of the funding. 17 years ago, Singapore companies embarked on the Suzhou Industrial Park project, 70 square kilometer. At that time, at the master developer level, at the Singapore consortium, there were more than 20 investors, more than 20 on the Singapore consortium who partnered the Chinese consortium. About 4 years ago, Tianjin Eco City, 30 square kilometer. At the master developer level, largely funded in the Singapore consortium by Keppel Corporation, and my company has a small stake in that. And then more recently, we have the Guangzhou Knowledge City in southern China, 123 square kilometer, and the Singapore consortium that partners the Chinese, it's a 50-50 JV, is wholly funded by my company, in other words, from Temasek. So you see the evolution, and for us, our strategic intent is at the right time, we'll bring in strategic investors to take part of our share in the Singapore consortium. Thank you.
Thank you very much for those comments. Three different perspectives on how funding and capital solutions have evolved in Asia over the last 15 years or so. There's been mention in amongst that about the role of government, and clearly government plays a central role in mixed-use projects and planned communities, certainly over the time frame that we've been talking about. How significant is it today, and for what sort of profile of projects? And maybe I could break from some of the experiences in Singapore and North Asia and sort of open up the question to Scott in connection with the Australian market.
Yeah, I think as a developer and owner, we sometimes don't think of government as our friend, but it's an important partner in the process of developing and owning and operating. I think if you were to break projects into the very large projects, downtown projects, as I think Lease is doing, and we have a project we're working on right now in downtown Sydney, there is a regulatory environment and there is a desire to hit some of the things that were talked about in the previous presentation, but they're really not a funding source. Governments that we deal with don't really have money. The GFC has not been kind to governments, just as it has not been kind to private entrepreneurs. So we look for them for regulatory assistance, bending the rules in terms of height or shading or whatever, if we can achieve a better project. On the smaller projects, more suburban projects, more land development related projects, again, it is a regulatory issue, and it is an infrastructure issue as well. Who provides the infrastructure to support a large-scale new development? Typically, the governments don't have a lot of money, and the developer cannot afford to put in a lot of infrastructure before you start the process of selling houses or leasing shops or whatever you do. So that's a delicate balance of aspirational infrastructure on the part of some of the government and the planners, and what is affordable on the part of the developer, and it works through a process. But we really don't look for government for money. We look for assistance in getting projects through the approval process and the infrastructure process.
Thank you, Scott. 2 points there. One, you've raised one in connection with government support, government incentives, and we'll come back to that and give Richard a few moments to perhaps have a little think about that. The other point that you made was about your government in your part of the world, i.e. Australia, not having money. Is that any different up here in Singapore and up in markets in China? Maybe I could direct that question to TS.
I think the Chinese government does play a big part in its current phase of urbanization. Land or projects are typically tendered out, but if you have the support of government and you are able to associate a specific theme to it, then there is a way for the government to facilitate the entry of a consortium of companies just like Singbridge into big-scale projects, possibly infrastructure. Besides incentives could take the form of ease of submission and entry and project setup. It could also be tax incentives. So the government in China, at least at this phase of their development, can play I would say a positive contribution to projects. Yes.
As the former managing director of the Singapore Economic Development Board, I can spend a long time talking about government's incentives and role in investments and industry and development. But I will skip that. I just have to share with you the kind of government involvement in all kinds of projects. It could be China, it could be somewhere else. The first is that we want the local government, because it's a long-term project, we want them to co-invest, put money where the mouth is. So, but the commitment is not just the financial contribution to the project, but it signifies a larger commitment of the government to our long-term project. So in Guangzhou, 50% by us, 50% by SOE of the Guangzhou government. Number two, the local government, more than just the money and incentives, we need a very strong commitment, both words and action, to the vision of the project and the commitment to make it succeed. Because for our kind of projects, it requires changes in rules and regulations. Are they prepared to mandate all buildings in Knowledge City shall be green building meeting this and this standard? Commitment to bring MRT lines to our project. So these are more than just incentives. The third point on the government role and commitment in our kind of projects is a commitment to implement software and not just focus on hardware. Hardware is what we see when we go to a city. Software is how we feel and how we experience when we get in there. And hardware is easy, software is hard to implement. So to what extent would the government prepare to bring about public policy changes to create the kind of software which we are very, very eager to share with them, our experience in Singapore software, to bring about a differentiated product. And of course, lastly, we expect the local government to provide good incentives for the investors in our Knowledge City or any projects like this.
Thank you for those comments. We'll return to some of that sort of software a little bit later on, if we may. But Richard, just in terms of wrapping up, if you may, in connection with government incentives, government support for projects, and your experiences within Lend-Lease.
Yeah, well, I think some great examples in Singapore of actually government incentives. And they can be hard incentives or softer incentives. And one example I might give is the Jurong precinct that is being developed at the moment. And we were very interested in this area, and it was presented as, in a master plan sense, as being the second sort of CBD for Singapore. And in the pre-dialogue that we had with the government, there's a lot of discussion about, well, how are you actually going to anchor that as a second CBD? And to their credit, I think they really mobilised a number of the government agencies, including your former employer, the Ministry of National Development, who's now taken 100% of the office space out there that we're developing. And that form of support is extremely important because it sort of crystallises then this as a place for offices. It crystallises as a place for government departments to set up, and it really starts to anchor the development, and that's a very important part of support. But I think one of the interesting discussions that we're having with the URA relates to how land is actually released in Singapore. And at the moment, the government is playing, very successfully the Grand Master Planner of Singapore, and but it has an objective to get certain precincts developed: Kheng, Puah, Jurong, and tends to be that the land is released as single plots. So developers such as ourselves tend to sort of speculate and second guess what's going to happen on these subsequent plots. It becomes a little bit of a gamble because there isn't actual clarity on that. And we are encouraging the URA to contemplate other types of procurement models, and ones where there may be more of a precinct released to a master developer, and developers could in joint venture work on a precinct. And the benefits you would get with that probably some of the things that Tyler Brule was mentioning this morning in his session with regards to integration. But there are significant sustainability benefits in terms of being able to come up with some servicing that manages the diversity across those precincts. And then as a developer, you've got the ability to bring the various components to market when the market is ready, rather than taking a speculative position. So we're in dialogue with the government. I don't know if they're going to take up some of these suggestions. They certainly have been successfully implemented, in other regions. And it could be an opportunity for the government, rather than to cash out, to sell the block of land, to actually go on that journey and to participate in that development as a partner. And I think that could be quite interesting in the future.
Can I pose the question off the back of that? Is Australia, for example, ahead of Singapore in terms of the attitude of the government towards that approach? And is China behind Singapore in terms of its allocation and policy around the granting of land for mixed-use development and master-planned projects?
Well, we always laugh that when we were first awarded the Barangaroo project in Sydney, which could have been 6 or 7 years ago, we've had a lot of planning issues and dealing with public consultation. The casino in Singapore has just been built, it's just been finished, and we're just now coming out of the ground. So I don't know if we can really put that up as a great model in terms of speed. It could be a good model in terms of engagement, but it's definitely slower.
Kheng, where does China sit in the hierarchy at the moment?
I think if one goes to the local government and say, I have a real estate project, fairly commodity kind of real estate project, they're likely to politely tell you, yeah, please come when I have my land tender. On the other hand, if we can offer exceptional value to the local government, say for example our project, if we are able to give them a value proposition and execute with them, in this case, let's say the Guangzhou Knowledge City, it, number one, aligns with and help drive the economic upgrading of Guangdong. They want to use us as a model. How to upgrade from the factory of the world today, to something that is knowledge intensive, high value added. So if we can offer a project that is transformative in nature, that will create a model community of skilled people and knowledge-based industry clusters, and the best practices could be extracted and replicated in other cities and districts in Guangzhou, then they see a lot of value. They get a new city, an iconic city. Anyway, in 20 years, we expect about 500K population in this city. New jobs, good paying jobs, vibrant community, and larger tax base to collect taxes, as well as high visibility, internationally at the central government and so on. So if we are able to bundle a continuous stream of value to the project, then they can reciprocate with extremely favorable terms and policies and commitment to such kind of projects. So I would say that the local government are very, very pragmatic, and they really look at, what you bring to the table and how it jives with their strategic objective.
Thank you. Perhaps at this point, I've got a few other themes that I would like to cover with the panel, but I'm conscious of any questions that have arisen from the conversation and the debate so far. Are there any questions at this moment in time? It's a threat. I'm about to talk about PPP. Okay, if there's no questions just at the moment, please. We do. Yep.
Thank you, panelists. I just want to get a better understanding of a long-term project like Guangzhou Knowledge City. it started as a 50-50 JV between the two governments, and it's going to be a 15-20 years development. The question is, how would the funding considerations change as the project progresses along? And what are the various milestones we could be looking at? Because initially you're funding it at the project level, but how would it change as it progresses?
Good question. And indeed, clearly it's picking up on time horizons of projects and indeed matching the projects to the capital, to the time horizons and aspirations of the investor base. So go initially to Kheng to pick up on Guangzhou Knowledge City, but then I'll perhaps broaden it to the other panelists to get into the discussion about how we actually match sort of the capital to the projects, reflecting such things as timing.
Firstly, the project is a commercial project. It's not a public sector project. Commercial project means we expect commercial returns. In this case, the commercial joint venture is between two consortium of companies that are owned by the respective governments ultimately. Firstly, our funding is by phases. So although it's a big project, 120 square kilometers is almost 20% of my little country, So we do in phases. There's a commitment by both parties that we can divest, but we have to be in control, the two main partners. We can bring other parties in the course of the project. A lot of the projects will be within the knowledge city. It could be a residential, it could be a mixed-use development, it could be a public amenity, we call it neighborhood center, and so forth. Those will be separately funded, each standing on its own on a commercial basis with developers that are totally unrelated to us, or we could be a joint venture with them. And I also like to add that besides the shareholders' equity, the project also will be funded by debt from the local banks in China.
TS, you said to me earlier on that the model is sort of initial funding, private equity, and then sort of to complement at a project level or an individual sort of plot level. Would you like to add some comments to what's been said around the overall matching the timetable to the project?
I guess all the investments would start with an investment thesis. You have a mandate from your own organization. That's an idea of how you want to deploy your own capital. Time horizon is crucial. So maybe I'll share one experience that Surbana has. We were in a joint venture in a project called Nanjing Eco Island. It's also a themed project that three Singapore companies, Yen Lord, which is listed on the Singapore Stock Exchange, Sembcorp, a Temasek Link company, and Surbana. Three companies went into a consortium together with the Nanjing government to develop an island into an eco island with industries, with sustainable industries, and with residential. We had an investment thesis. So during project execution, there are always problems, and after the initial three years, we realized that the execution timetable is likely to change, and in fact, more capital was needed. The reason being that there was resettlement to be done on the island, and the government was principally responsible for the resettlement. They gave a budget initially, which thereafter they would like the investors to cough up more money. So from a returns perspective, the investor has to decide, is there merit to continue with the investments, or due to your own investment mandate, you have to decide otherwise. So in Surbana's case, we actually decided to pull out. We talked to the other partners and we said that we saw great value in the project, we wanted to fund the project, but due to the changes in circumstances, it no longer is viable for us. So we actually sold our share. Yeah, this is an example where when conditions of the project changes, especially timeline, we are really prepared to go like 5 years or 8 years with the project, but when it extends beyond 10 years, sometimes it puts a strain on allocation. So that is probably a good example of how a time horizon or changes in time horizon can affect the investment approach and leads to strains between partners.
Scott, on timing, sort of in Australia, a lot of these projects are of substantial duration. It's clearly potentially impacting your company's ability to potentially invest in some of these projects. What are the implications of these longer projects for yourselves?
Well, long projects always start out as a vision of a short project. And then it gets through a process which makes it a long project. The longest projects we have, long-dated projects, are some land development projects, which we never thought were going to be that long-dated, but there are changes with market environment, changes with entitlements, changes with approvals, and changes with promised infrastructure that was never delivered. So the process in getting back to capital sources, it's just moving down a risk curve. We start out with a concept. We use our own money. And then as the concept evolves, if we need capital, you would look at private equity, which is high return, high risk. And then as the project took form and there were improvements and entitlements, then more traditional forms of equity, whether they be sovereign wealth equity or U.S. pension fund or basic high net worth funds will come into play. And then as the project moves into a construction stage, you have the traditional lenders. And so that process seems pretty consistent. The only issue we have is that from concept to construction, the time frames seem to be a little bit longer than I think probably all of us typically envision when we get involved with these things.
Thank you. It strikes me that even sort of the largest businesses, the largest developers, appear to have a clear strength in one or two asset classes, and indeed are challenging themselves on how they deliver the best solution on other asset classes within the confines of a single project, whether that be a master planned community or a smaller but mixed-use project. Recognising this possible sort of limitation must clearly have an impact on the ability to raise, blend, and indeed sort of match capital to that. Is that a statement that you concur with? And I'm going to direct this question to Richard. And indeed, what are your experiences in sort of blending projects with capital?
Not sure if I really understand. Sorry, Gordon, I really understand that question.
Large businesses pursuing mixed-use development, but recognising challenges internally about potential ability to deliver on different components of the project, be it the residential component, be it the retail component. How do you therefore then match the capital?
Yeah. I mean, I think, we're looking at a project outside of Singapore at the moment that has the components of retail, office, hotel and residential. And some of those classes sit very comfortably together. Office and retail sit comfortably together because you want to increase your midweek trade, and office is a great way to do that. And residential can sit well with retail because, particularly in Asian markets, people want to be close to amenity. And hotel can sit well also in that environment, depending on what's around, in terms of bringing people with higher higher spendable income into a retail precinct. So all of those components are great, but then when you go to lay it out on a sheet of paper, things start to get a little bit tricky, particularly if you've got different capital sources for the different components. And, you know, the normal issues about providing separate title for these different components and whether that needs to be separated at the ground plane so that the land can be actually subdivided and whether there's a value proposition in that. But if you get past that and you move into a strata type of arrangement, then there's the fights about how much space is left for the office lobby on the ground plane and how much is for retail. And it gets a little bit complicated. And then all the other complications of, you know, taxi drop-off, servicing, you know, et cetera, it becomes so complicated that if you start introducing a number of different capital sources, it can go pear-shaped very quickly. And in the circumstance of the project that we're looking at the moment, we, you know, are deliberately wanting to simplify the capital source and that capital source sitting across those four components, because it's the only way that you can get alignment and make that project move forward. Yep.
Thank you, Richard. TS, your project's in China, predominantly sort of residential-led, but having to increasingly incorporate mixed-use components to that. How are you tackling those from a funding point of view or from a long-term concept planning point of view?
I'll maybe give the example of my township in Xi'an. It's 136 hectare residential project. It has largely residential components, about 90%, but we do have 10%, which amounts to about 300,000 square meters of commercial. So initially, our funding from shareholders, from our private equity funds, the time is fixed. You know, we have to deliver the project and the returns within 10 years. So that's the life of the fund. But there are components like our commercial that could outlive this time frame. So what do we do with funding? For residential, it's easy. We trade it off. We build and we sell. For commercial, we split it into two. One is strata. Strata is like retail shops where we can also build and we sell. But we don't sell immediately like residential because the value is brought up over time when people live into the townships. So we take a longer time frame. But the mall itself, for example, we are supposed to build a 200,000 square meter mall. That we will invite other sources of funding. For example, we were talking with Capital Mall Asia, which is kind of a sister company, where they would raise money through funds, REITs, and they would invest in malls and hold them for a longer term. So it's like matching capital to project. And we match our initial capital to residential, and we find new sources of appropriate capital to match other types of development within the same township over time.
Thank you very much for that. The clock down in front of me is telling me I've got about 20 minutes left, but I'm conscious that's eating into refreshments. So what I'm proposing to do is open it up again to the audience for any questions. But just before I do, I'm just going to sort of raise one other area, if I may, which is on theming. We're seeing IFCs, we're seeing eco-cities, we're seeing innovation parks, we're seeing knowledge cities popping up in China. We're seeing integrated resorts popping up all across the region. How important is this theming for attracting capital and matching capital to projects? Kheng, are you perhaps able to tackle this one at the start?
For large-scale integrated long-term projects, the theme is important. But more importantly, is to connect this theme to the strategic objective of the local government. So in the case of Knowledge City, the mantra of the current government is economic transformation. So the theme of our project is how to create a new model, a new paradigm that is livable, that's eco-friendly, and that's easy for high-end industry to do business there. In other words, you want to create, through this development, a kind of virtuous cycle where skilled people and talent goes there and it attracts knowledge-intensive enterprises, which in turn attracts more talent, which attracts more knowledge-based enterprises. So this theme is crucial when it is aligned with the political and economic imperative of the local government in terms of securing the project, in terms of making the project commercially viable, and in terms of continuing support from the government. Because the success of a project is a success of the government. So it's very important. In Tianjin, the theme was eco, because there's this piece of land that is not even fit for plants and agriculture, because big chunk salt pan previously, and it's very arid, water shortage, etc., etc. So it's how to apply practical technologies to transform and very eco-challenge large parcel of land into a very livable, eco-friendly, and very vibrant community. And the lessons from there could be extracted and applied to other developments by the government there. So, very important.
Gordon, can I interrupt just for a second? I think there's actually a technical glitch here, so maybe we can, because we have an 11 o'clock session, so we'd like to, sorry, thanks.
Perfect. Look, a number of the panelists will be available for questions immediately after this, but I think we're now out of time. And accordingly, I would just like to say thank you for the question from the audience. Apologies that we haven't had the opportunity to be able to answer more of your questions. But I'd like to end by thanking the panelists, to Kheng, to Richard, to Scott, and to TS. Thank you very much for your time this morning and your valuable contributions to this discussion. Thank you.